back here on stage, and I think we couldn't have asked for a better speaker to stir things up. You usually need someone like Kunal Shah, who is agent provocateur on a post-lunch session. So Kunal, it's an absolute pleasure. Thanks very much for joining us. You know, we just heard from Vali there a very long introduction with the various achievements and milestones that you've been able to clock as an entrepreneur. But there's another side to this man that I'm going to try and unravel today, and that is the digital yogi side. Kunal, which do you identify with more today in this phase of your life, the entrepreneur or the digital yogi?
I don't know. I guess I think everybody's beard can be classified as yogi, but I think we share one thing in common. We are both philosophy majors on a fintech stage, and I think
I don't know if that's a good thing or a bad thing. By
I
the
don't
way.
know. I don't know. I think the need for seeking truth and the need for kind of going beyond the questions of why, I think just allows us to kind of be more thing. And I think in India, anybody who seems to be truth seeking is easily classified as yogi. So I don't know. We have just the bar is low.
Okay, well let's link the two. The aspiration for truth-seeking with the second word in our conversation that we're meant to have, money. Can you make money out of truth-seeking? Is truth-seeking a profitable business model?
That's a great question. If you, and Shirin, you've had the privilege, and I envy you for that part, that you've managed to meet very accomplished people in your life. And when you go really deeper, you'll realize that they are mostly philosophical. When you see at a certain level, they are all some version of truth seekers. And I believe that a lot of, I remember like there's a thing where Shah Rukh Khan is saying that do philosophy after you make money, but I do believe that you cannot make money without really being philosophical about things, because if you are not having depth in what you think, depth in what you know, you're going to mostly remain at surface level, which you'll find everybody at, and very few people have any interest in any depth whatsoever. And surprisingly, it's less crowded. The profit pools are also less crowded when you go to depth of things.
You know, let's talk about the profit pools now, Kunal, since we are talking about the big opportunities and the headroom for growth. To start with, I want to understand from you, what is it that you want to be? What do you aspire for Cred to be? Today, we are in a situation where a phone company is trying to be a bank is trying to be a fintech. You know, what is it that you wish to be?
I think internet has enabled many companies to become platforms which can host many businesses. Now with the India stack and all the infrastructure that has happened in the last, digital infrastructure that has happened in the last 10 years and that's coming in the next 10 years, we are all in position to build interesting businesses on top of these platforms. It's not surprising to many Chinese companies when you say, oh, TikTok happens to be the largest e-commerce company now and probably going to be one of the largest lenders in China. For most Chinese, it's not shocking and surprising, because once you build a platform that has engagement, that has users, cross-selling services that otherwise don't classify into things makes it hard to believe. When we grew up, you know, when departmental stores came, we were mostly shocked, acha, ye bhi bechta hai, fruit bhi bechta hai, shirt bhi bechta hai, all of that stuff is starting happening. So I think when you can establish an audience, trust with that audience, ability to build multiple businesses on top of that is going to be easy to do. Although it's not easy for everybody to pull off, because you need to get a critical mass of customers to kind of come in. Cred's view was very simple: reward financial behavior, which allows good behavior to happen with money. Most of us are of a generation where we have significantly made more money than our parents did.
Yeah.
And they were not our coaches for money. We are finding coaches on YouTube. We are finding coaches everywhere else. And I think there is a time where good financial behavior is going to be required, while there is a floodgates of credit that's going to open with UPI now coming into the fold. We wanted to just build a company that focuses on good financial behavior and build on top of that. And we also focused on the top end of the customers. Simply the reason is my previous company was built on all of India, and surprisingly, everybody showed up over there. And I'm like, okay, now I should build something that is on the opposite side of the spectrum. Also because of the concentration of profit pools is still very skewed towards the top 30, 35 million customers. And you've heard that multiple times.
Yeah.
The Kamath brothers have talked about it, Zerodha, to multiple banks, if you study the reports at the core of it. And I think India is still to go through the per capita income growth challenge. And we've discussed one topic that is kind of connected is the per capita is not going to happen till female participation of labor increases in the workforce. We cannot magically expect the $5,000 per capita to happen. So focused on top end of customer, rewarding good financial behavior, and simple principle, don't sell a product or service that we would not give it to our family or friends.
Okay, many things that you've said there, Kunal. Let me try and unpack, and we've got about 19 minutes to do that. So let me start to unpack what you said. Is the aspiration to be the department store of the fintech world?
I guess we will not be limited to financial services is what we see. Let me tell you why I believe that's the case. As much as we love fintech and financial services, the average consumer hates it.
Why does the average consumer hate fintech?
Because money causes anxiety in most people, right? Imagine spending 2 hours on an app per day, which is giving you stuff about money. Unless you are a trader who's hooked on to markets, for most people it's an anxiety-inducing.
Which has worked very well for the Zerodha brothers.
Yeah, but if you notice an average customer, they think of financial services app like a petrol pump. Go there quickly, fuel your car, and leave.
Yeah.
Right? And if you really want to build a high quality engagement platform, you have to actually focus on things that actually make people feel joy. And if you happen to be selling financial services over there, so be it. So I think our view of life is to really build a lifestyle first company. Financial services is how we monetize, right? And it's unfortunate, I'll put the philosophy angle over here. It's unfortunate that we are all known by how we make money, but that's not who we are.
Well, you're not making money yet.
We are. I think making money for fintechs. I mean, we can say what we want, but I think unless we had these loss-making companies, we would have not seen the fintech growth that we have seen so far, right? A bulk of the UPI growth has come subsidized, and a lot of other entities kind of supporting these growth stories. And I think they're all investing behind these initiatives because it creates distribution, it creates a change of behavior. And I think we're going to see a long time before kind of profits come in for these. And it's not something that it's harder for some of the companies to now achieve. Many companies, I would say, in the unicorns, majority of the companies that have managed to cross $100 million or $200 million revenue run rate are all financial services or fintechs, right? And it's very hard in other categories. Like, you know, I mentioned this before, but like there are 183 companies that have more than 1,000 crores PAT, and I would say 40% of that PAT is financial services. And funny enough, like the total number of retail companies in the 183 companies with 1,000 crores plus PAT is 2, maybe 2 or less than 2. The thing is, we are far away from like expecting profit pools and something else, but financial services can make money.
The question is when.
The question is when, and if you have investors who support your ambition to kind of build the scale, we found ourselves in a very, like a good, lucky opportunity. We focused on credit cards and credit, and since then the whole market has kind of changed. COVID was a huge accelerant to credit behavior. We are seeing now with credit on UPI, all of these things are going to get into a great mode. We find ourselves in a very lucky spot to be building. To me, making money, large-scale revenues and profits, I think it's a choice that companies will make based on what kind of capital support they can grow to match their ambitions.
Okay, I don't want to labor on this too much, but I still want to understand from you. You know, many people, and what I'm hearing from you as well, is that it's if we bring down marketing spends, if we bring down advertising spends, we will be profitable. It almost seems like it's a switch that you want to turn on and off, but you haven't decided when you want to turn that switch on and off. When do you feel or believe that you will be ready to turn off that advertising and marketing switch to be able to get to profitability?
Well, our focus was to focus on customers who currently have good credit scores and a credit card. That's the focus customer we have. And today we have I would say 35 to 37% of the market share. We want to probably get to 50-55% market. We have significantly reduced our marketing spends because the brand is already kind of known. Actually, I'm curious, how many of you use Cred over here? Okay,
That's
looks
not bad at all.
Not bad at all. Thank you.
Not
For
bad at all.
others who are curious, this is a good time to explore what the app is about. The intent is to like keep coming to this conference and see if till the whole room kind of almost raises a hand, because almost everybody has. How many of you do not have a credit card over here? Yeah, so that's my target market. I just need to see maybe at a 60-70% penetration over here, and we can choose to not do marketing. But there is one interesting trend that is happening in marketing. When we started our customer acquisition cost, let's say if it was X, today we are operating at 1/10 of that customer acquisition cost. And by the way, even then the customer acquisition cost was significantly lower than what, let's say, a credit card company would have paid to acquire that customer. So I think for us,
So what's brought down the cost of acquisition? Just the fact that there is more latency as far as the brand is concerned, or has something changed in the competitive landscape, or has something changed as far as consumer behavior is concerned?
I think 3-4 things. First, us kind of front-loading the brand investments, like investing in things like IPL, investing in like advertisements and all of that. Financial services, unfortunately, if you're building a consumer brand, requires consumers to feel trust that you are somebody with some credibility that they want to kind of, like credit card bills, a large amount of money that people need to do with an app that is like, we are going to be 5 years old in November.
Yeah.
Right? So I think doing that requires some amount of upfront brand investments. And other thing is just the market environment is kind of, because the capital environment kind of dried up, reduced the competitive intensity. Also, consumers are way more savvier about digital things. They are looking to do almost everything digitally. So, for example, we launched UPI maybe a few months ago, like 5-6 months ago, and we've already kind of seen ourselves get to the number 4 spot with still focused on a very small customer base. So, and this is surprising behavior to us as well. By the way, interesting data for you, credit card customers do more transactions on UPI than they do on credit cards. In terms of count of transactions, and that obviously, like, it was not on our roadmap to kind of go into scan and pay P2P, but we realized that these customers are actually, you know, this is like the old times where we used to have expensive cell networks, and there should be this outgoing people and incoming people.
Yeah.
Today we are noticing that the credit card customers are probably playing the big outgoing role, because they spend a lot of money on UPI and transfer money, and many UPI handles, my gut tells me that they are still on the incoming basis, and very soon they're going to become outgoing as well when they start using that to scan and pay. So I think you're going to see the waves of growth in UPI and cohorts, which is going to be exciting.
You know, you talked about the fact that you're going to be turning 5 now, Kunal, and you gave us a glimpse of what this journey has been like, this 5-year journey has been like. Have you mapped out what the next 5 years potentially could look like? What is the aspiration that you have over the next 5 years?
I think creating more things that this cohort of customer values, be it, so we have built a small shopping platform that is helping D2C brands kind of host their products, and we have a zero commission store which kind of, like today, for most brands that are listed on our platform, we do equal amount of sales that they get to many other major platforms on their thing. And I think just our ability to just launch a service and see that traction grow gives us the confidence that as long as we do a good job, as a company, we do not have the philosophy to be first in everything, like be part of everything first, but do it right. Do it with something that people will appreciate the quality behind the effort. And build for a cohort that is more discerning. So we'll keep doing that. So in terms of should we focus only on financial services, the answer is no. Should we focus on making money on cross-selling? So, and even in financial services, we cross-sell for banks, NBFCs, insurance companies. We just want to keep building a superior engagement platform that allows seamless offering of some of these services now. And I think there was a time where it was unclear what is the role of a fintech, a bank. All of these were like many years ago, you mentioned about we being on a panel, and it was a hot topic that where does the line start and end. But I think we have all found, and thanks to very
So the lines are much more blurred today and almost sort of merging, aren't they?
I think it's just a coexistence. I often refer
Is it a
to,
happy marriage?
I think marriage is a big word to use. I think there is a coexistence at this point of time. What I know for a fact that everybody has realized what value each party brings to the table. I believe fintechs are nothing but these new fancy branches which customers love to go to, right? And therefore cross-selling at these places you may or may not want, but if some banks benefit from doing that, other banks will kind of take a notice and want to be there, right? And I think there was a time where you could only withdraw money from inside a bank. Then slowly it became an ATM inside the bank. Then it became an ATM outside the bank.
Yeah.
And now the most used ATM is at the mall now, right? So I think financial services is going to go through the same journey where cross-sell will happen at platforms that have the highest amount of engagement, highest amount of time spent, and the joy of actually feeling like going over there. And I think, therefore, the battle is going to be of engagement, more about the ownership of customers is not a function of who's registered with you. It's about where do they spend their time.
Fair enough. But, and I was talking to Mr. Kamath just before this, and he said one of the big things that he expects to see is consolidation, with banks actually going after fintechs to take this collaboration and this partnership story forward. If a bank were to come calling today or a couple of years down the line, what would your response be?
My first company, FreeCharge, was sold to Snapdeal, and Snapdeal has ended up selling it to Axis Bank. It still continues to do well. My view is that these lines are going to merge. I think there are going to be very strong partnerships that will emerge, either with some strategic things happening between these parties. And it's happened in most markets where fintech has been a little bit, let's say, at least China, you see that these lines were kind of merged in very interesting ways. I think we now are at a time where there is a clear realization that, okay, these guys can do this well. And it's very hard for us to change DNA. For example, do we foresee that, we'll become, let's say, the best lender or best underwriter or best insurance underwriter? No, I think there are
But
best
that's not
companies.
your aspiration.
And we don't think we'll ever be good at that. There are things that we are good at in terms of customer engagement, experience. And I think that's going to be a very clear thing that, okay, ultimately it's going to be about partnership and creating this storefronts that people love going to.
You didn't answer my question. If a bank were to come calling?
I don't know. I would love for that to happen. Would it make sense to do it or not? Will require a very different level of discussion. But I think, I don't know what is happening is, I don't see that the strategic discussions are already happening now. I don't think it's reached to a point where there'll be ownership situations yet. I think we are far away from that. But I do believe that in 5 years from now, will fintechs have bank ownerships in them in some ways? I see that. Will there be some fintechs who will have some investments in banks going forward? Potentially, yes, also. I think it's going to be interesting how this plays out, but I think there is going to be a very clear view the regulator will have on how these things will work. And I think they are doing the right thing consistently. They're being extremely prudent about how the ecosystem should evolve, like what role each plays. And I think that decision on how some of these things will happen will also kind of have a lot of regulatory point of view on how this should happen.
Yeah, I would imagine that will be the case. The regulation will play either constraint or unshackle the many opportunities that we just spoke of. But, I want to talk about the headroom for growth, and including this conference and, previous conferences, there are reports that are out there that peg, $1 trillion and $1.5 trillion and so on and so forth. I want to talk about the here and now. You talked about the customer base that you're going after, which is really the top tier, the creamy layer, so to speak. And that is the aspiration, that's what you want to stick with, at least in the interim. But what's the opportunity for the fintech world today? At the end of the day, there is the addressable market, there's the monetizable market, and there is a big dissonance between the two. What is the real opportunity?
Shireen, there are global companies love to come to India because India is the DAU farm or MAU farm of the world.
Yes.
Right? You see that now in global influencers, and celebrities also do some India posts now because it gets them tons of followers, right? ARPUs, unfortunately, are not going to come unless
Nowhere
per capita, right? So there's a data that came out recently, like like companies like Meta have, like compared to US, we are like probably 40x or 45x on ARPU delta, right? So we're going to have a long time before we get there. And because of that challenge, the income concentration on the top is going to be even more, and it can be accelerated with COVID even further. Now the truth is, while we may all love to kind of build for India and get a lot of things done for India, the market concentration of revenue and profit pool. So just some data points. Today, if you look at saving account deposits, right? These 35 million households would probably contribute to like 80-85% of all saving deposits, right? And India is a huge country where we should actually see growth across the cohorts, but we do not see that data yet. Today, if you look at the credit will have a strong correlation to ability to pay taxes, ability to pay consistent taxes. That number is public, and you can see the number of people paying taxes is still like, or filing taxes are like 60-70 million. People who are actually paying some taxes around 30-35 million. So we are still in that vicinity, but there are opportunities in agri where I'm hearing a lot of rural markets are showing extraordinary promise, because now with digital infra, you can create new business opportunities and actually give them access to credit to kind of do well, right? Today, UPI, a lot of UPI acquiring companies are able to provide loans to merchants that historically not accessible getting credit. So I think the 10-15 years will have a very different shape to more people kind of getting access to credit. Our focus was of people who are credit worthy, give them superior experience. But I think most people becoming credit worthy through different mediums, with account aggregator, with UPI data, with GST data. There is going to be so many interesting opportunities in the merchant space, SME space, where a new set of affluent class is going to get created, and I think we are going to see a shift of that for a long time. However, the factor of the female participation will remain as the nagging factor, because it is declining, and it's not a great thing for the country which is aspiring to have a $10 trillion ambition, but the per capita income requires like all genders to participate.
They do, and I'm glad that you talked about that, because this is something that I'm deeply passionate about as well, and I completely agree with you. Forget 5-10 trillion, we cannot do it if we don't have half the population participating in the formal economy. Why do you believe in the startup world today, it continues to be so hard for women founders to raise capital, for women founders or for women employees to make it to leadership positions? Do you believe, even in a conference like this, we have so few women being represented here on stage?
I think I wish I had great answers to this, and we've discussed this in the past. I wish I can think about what is going on. I think it will require serious conscious effort from everybody in the ecosystem to focus on this and improving this metric as if it matters to all of us, because we cannot just say that, oh, the country needs to do something and our contribution is not meaningful in making this happen. Leadership positions will happen when we are kind of helping, coaching people from the first job to kind of take them along and do more things. There is always going to be this societal pressure of, oh, there is a marriage situation or there is a kid situation, which is kind of are the top triggers of women dropping from workforce. But I think if we really want to see a society that is super evolved and kind of inclusive in every manner, all of us will have to contribute. In terms of startup ecosystem, I would say that it looks like it's better, at least from an anecdotal version of when you look at, let's say, Bangalore as an ecosystem, you see that thing. But again, it comes to tech talent and product talent. If you have come from, like, I'm probably the only non-STEM founder who's in the tech ecosystem. So it was hard for me to raise capital as well. Imagine trying to carry a philosophy degree into trying to raise money. It doesn't help. So I think we need to change these things. And I think capital now is going to require, at least the market we are entering in, it's not going to remain only about idea and pedigree. It's going to require some traction. And I think if you are truly thinking about entrepreneurship, everybody will have to demonstrate some traction, some product market fit before they get serious capital. And I think we are entering a very problematic time in our startup journey of India that nobody believes they can do a startup till they have capital. It's like saying, it's akin to saying that you cannot run till you have Nike shoes. It's not the same. It will make you better at running, it will make you faster at running, but hoping that the only marker of, and Unfortunately,
Is this the unintended consequence of too much money that's come into the,
Absolutely,
into the
and
ecosystem?
worship
And
and-
how do you unlearn this? How do you unlearn worshipping unicorns?
because they are mythical, we should stop worshipping them. We have to worship people who have large profit pools. We have to worship people who have built companies without capital. We should not celebrate people like Kunal Shah way more than what we should be celebrating. There are hundreds of founders who have built very, very profitable companies. They are not even known. I think we tend to glamorize folks who should be not as glamorized, because these become the heroes that we want to chase, and I don't think that's a fair thing to do, because the country always had entrepreneurial spirit. The capital is a new thing.
Capital is, and the kind of capital that we've seen is a new thing, and I'm glad that you talked about unicorns being mythical creatures, because they are, and I think a lot of the bad behavior that's been learned, it would do us well if we unlearn that. What do you do with your money today, Kunal?
I think I had mentioned this before. I do not have any mutual funds, any stocks. I don't invest. I only invest in startups. Is a way of paying it forward. I don't know how many startups I've invested, but I don't invest for necessarily financial return always. It's about just kind of helping the system move forward. There was a time when I used to meet founders and decide to invest. Now I don't meet them. It's probably email, WhatsApp, and I invest. And I think it gives me a lot of joy to just see. I probably invested in like 70 or 80 fintechs now.
70 or 80 fintechs.
Yeah, and
what is the average ticket size or the check size that you write out?
Small ticket sizes, like maybe at $50,000 or in that range. And the intent is to kind of help in any manner. And I think if you can create 1,000 high quality founders, and they are also learning to pay it forward, we'll convert the country from job seekers to job creators. And I think that's going to be an immense moment for us to have, because we are used to only industrialists being treated as business people, and all these people are like having all these glory and this pride. I think if you just create a culture where we encourage entrepreneurship, I mentioned this to you, I'm going to mention this, in Portugal, like if you go to the church, like normally it's only the royalty that are allowed to be having the tomb inside, and now, and then I noticed that all the explorers like Vasco da Gama and others who actually helped take the country forward were also given this special position along with the royalty. And celebrating risk takers, unless we do that, we are not going to break out as a country, and I think that is one big change that we need to go through.
Well, what is the next big risk that Kunal Shah is willing to take today?
I do that all the time. I think the startups stop becoming a startup when they stop taking risks. So hopefully many new things, many exciting things. We are entering a world where we have new launches by NPCI every day. AI is evolving so quickly. So as an entrepreneur...
What is your big fear? In a world where there is so much disruption, there is so much change, and there is such constant pace of change, what is your big fear today as an entrepreneur?
If I go really fast forward, not as an entrepreneur, I think as humanity, we are not realizing the risk of AI. We see it and we feel it's like a cool demo that we see on ChatGPT and we are done with it. But I can tell you with confidence that 90% of people who have jobs right now today may not have their jobs relevance in 10 years from now. And I don't think humans can upskill so quickly. So a lot of people say, oh, technology has come, computer has come, we all upskilled. But the thing is that this time to upskill is going to be a real challenge, and unless you are a very curious, compounding person, everybody's jobs are at risk. So that's what my biggest worry is right now.
That is your biggest worry, and I have to say that I would agree with you as far as that is concerned, because I don't think we quite can imagine the consequences of what this AI and ML world is going to bring upon us at this point in time. But what motivates you today?
I think we are in this exciting time for building for the country. We are going to see a transformation, and there are so many bright young people with so much ambition around you. So I think just seeing people's transformation journey around me, be it entrepreneur, be it my team members, just seeing that is the most exciting thing for me every day.
you know, we've grown up in an environment where it's always the paranoid succeed, and there's so much of an emphasis on constantly being able to do something. Do you ever believe in the value of not doing something? Do you have not doing days on your calendar?
A lot. I have now moved to 2 days a week to not working or not actively doing. I'll tell you why. Because if you really have to see the chessboard, you don't have to be on the chessboard. You have to be away from it. And I think doing nothing is only when the brain connects dots. Doing things are not good for connecting dots. And in a world that is changing so quickly, being busy is going to almost become a curse.
Being busy is going to be almost a curse. I think are we out of time, or do we have a couple of minutes more? So you know, one of the things that we've been deeply passionate about at CNBC for the last 23 years is financial literacy.
Can I use the 2-3 minutes to ask you questions?
You're going to ask me a question?
Yeah, because
we have only 3 minutes left. I have to finish asking you questions.
I should ask a couple questions to you. You have to know about so many industries. I can barely understand what's going on in fintech. How do you keep up with, you meet people from all industries, so many different sectors. What is your method to constantly compound?
Short answer, having the humility to say I don't know it all, and having the ability to absorb like a sponge from whoever I meet. So I will take something away from this conversation, like I did from the previous conversation. And as Mr. Kamath said, I think I truly believe in the value of being a listening organization and being a learning organization, and that is what keeps me going. And I hope that answers in short, the question that you asked me, but I don't want to spend any more time on me, because this is about you today. So let me ask you this, 5 years on, 3 years on, 2 years on, IPO on the cards?
I think eventually all companies will have to kind of go down the path of being public. We have the luxury with our investors who are actually quite bullish and are very big growth-oriented investors. And I think we see ourselves kind of keep building on. I don't think we have any timelines right now. Do companies will eventually have to go public? The answer is yes. But at least from the lessons of all the past lessons, I think we want to be in a much more solid position in terms of metrics, profitability before we even think about IPO. And I think at least the way the company is growing right now, our revenue is growing, our unit economics are growing, we feel very confident that hopefully we'll make it at least in the top 500 or 1,000 companies in terms of profit pool size. And I think even if it takes...
By when?
Thankfully, that's why I'm not a public market company. I don't have to answer these questions of which quarter, which year I'm going to be profitable at what scale.
Yes, if you go down that road, that is what you're going to be asked down to the decimal point. But let me end by asking you, Kunal, leave this audience with a snapshot of the journey that you've been able to cover in numbers in the last 5 years. Because at the end of the day, that's what it boils down to. You said that CAC you've been able to bring down your burn as far as acquisition is concerned. You've been able to convert. You do see a great degree of opportunity. Sum up for me. Leave me with 5 big numbers that symbolize your journey today.
I think we've been able to significantly improve credit scores of close to 15 million customers. We have significantly improved their good financial behavior and not have very high interest rates to same 15 million customers. We've managed to capture maybe 35 to 37% of market in terms of credit card customers on our platform doing different things. And in terms of revenue scale, I would say we are probably in the top 10% of unicorns in terms of their revenue scale in India. And hopefully we'll get to the top 2-3% of unicorns in terms of revenue scale very soon.
Well, that's a good snapshot to give us a sense of the journey covered, but more importantly also an indication of what is to come next. What is it that you would like to explore from here on? You talked about wanting to be an explorer or being an explorer. What's the next vista that you hope to explore?
There is so much to do. I wish I could be cloning myself and building 10 companies. I wish I could do that. But
if there was one company that you could build today, what would it be?
It has to be something to do with AI. Because we are in a very different time of the world where we can actually change
Is that
everything.
where you're investing now?
I haven't seen good quality AI companies pitched, so I don't think I've invested in any good companies. But I think
Can India do good quality AI companies?
I think so. I think it's going to be exciting in terms of the scale. Will we create an LLM? I don't know. I think we are going to try. Many good founders are already kind of trying that. But will we create something on top of that LLM that has been out there and many models exist, not just GPT? We are going to see very high quality companies coming. And India may have some unique advantage because we can actually combine people plus AI in a unique way. So very different set of companies might emerge. We might have a very different software company with a co-pilot of AI. We might have different BPO companies with a co-pilot of thing. We might have different call centers, different collection agencies in lending with AI as a co-pilot. So I think we are entering almost a cyborgy time of company building.
A cyborgy time of company building. I like the sound of that. I think it's going to give people a lot of food for thought as well. So I'm going to end by asking you, Kunal. You know, we started with philosophy. We'll end there as well. What is the big life lesson that you sort of live by today that you would like to share with this audience?
Everybody who has achieved anything in the past, in 100 years, they'll be forgotten. So it's important that what you are doing at this point of time makes an impact to people around you. And if they have to think about you when you are not here, they think of you as somebody who actually contributed in a positive manner, and that's what it matters.
Is that the Kunal Shah legacy?
I hope so.
Kunal Shah, thank you very, very much. Ladies and gentlemen, a big round of applause for Kunal Shah of Cred. We wish you the very best of luck, and thank you very much for sharing your thoughts with us here this afternoon.
Thank you so much.
Thank you very much.
All right, ladies and gentlemen, can we give a huge round of applause for this candid session where we got exposed to Kunal's chessboard metaphor, perils of AI ML, the future plans, and of course the role reversal we witnessed with Shireen answering some of his questions. It's now time to